Thanks for tuning in. I see you're passionate about your future, so let's dive right into it. So in today's video, we're just going to basically be back testing. We're going to be going over the setup that I took today on January 23rd, right? So we have Euro Swiss here on the 15-minute time frame, of course. You know, every time I come to the market, I'm looking for my strategy and my setup on the 15-minute time frame first. So as soon as we got to our sesh, this is what we see, right? Obviously, off TOP, kind of looks like a little downtrend, right? Got price coming down, breaking some structure that was right here, right? Pulls up, so you have a swing low at this point, comes down, pulls up, touches that swing low. Could have got in for this sell right here, and then we see a downtrend type of formation. This setup was during New York, through nothing during London for me to take, but this setup occurred during New York. There's not really too many zones to mark up. We do have this 15-minute supply here and also a 1-hour supply zone, but obviously price is going away from that zone, so we're looking for something that will possibly allow price to fill in that gap. So when I came to the market, this is what I saw, and we see here that we actually have a 15-minute demand, right? And one thing about this demand is I love when a demand is at like the bottom of a trend, right? You see how this is a downtrend, obviously falling, and then it finally throws demand at the bottom of the trend to maybe a reversal to the upside. So when supply or demand happens at the end of the setup or the end of the trend, more than likely you're gonna be in that reversal trade, right? So this might look counter trend because we're on a downtrend, so taking this demand is kind of counter trend. But what you have to understand is what we see is price. Really look at this and see what price is telling you. What we see is price push up, leave a gap right here, and then it pushes up again, right? So now this is our swing high, right? It pushes up again, breaks structure to the upside, and now we're waiting for it to pull back again into our zone so that we can get some type of price action up in here, candlestick break to take it to the upside, more than likely to some liquidity up here, right? Because there's a lot of money sitting right here. It's a lot of money sitting right up here on this resistance play. So we can take it to this liquidity or even our 1-hour/15-minute supply. So that's how you kind of gauge on where to hold, where you can take your trade to, right? Because what you have to understand is the market will always balance itself out. These gaps here, these gaps, which is basically our zones, these gaps in the market will always be balanced by the market. If there's an imbalance, i.e. a gap, the market will balance it out. It will come back and fill in that gap. Not saying it will happen in 1 minute, 2 minutes, not saying it's going to happen in 15 minutes, not saying it's going to happen that week, but price will come and fill in that gap. So knowing that gives us ahead of the game. You feel what I'm saying? So at this point, we're waiting on price to come back to our zone, and now we see price pull back. You guys know off TOP, I love when we get an exhaustion candle, big candle like this to our zone. This candle is scaring a lot of traders, and since we're already close to our zone, we don't want to miss that initial entry on the 5-minute. So what we can do is zoom in here and be waiting for price to touch our box. And what do we see? We see that we also have a 5-minute demand inside of this 15-minute demand as well. So we like to see that. We don't zoom in the box to the 5-minute demand, but we just want to know, and it's good to know that, hey, there's a 5-minute demand here. Price might want to come into this box and touch that demand instead of hitting the box right here and taking off. It might want to come down and touch the 5-minute demand inside of the 15-minute demand before it takes off to get everybody into the setup. So that's something else that you know when zooming in and getting a little clearer picture, right? So at this point, price is moving. We're waiting for it to touch our zone. So just a quick second. Some traders will tell you to trade this. Let me make it where you can really see this. Some traders and mentors, some teachers will tell you, hey, this was close, right? It's not that far from your zone. It didn't touch though, but it broke above, so get in right here. Absolutely not. I don't give a fuck. I don't care if it's 1 pip away from my box and it breaks above or below for a supply. I'm not getting in. It must touch my box. It must touch. Don't get caught right here on some rookie stuff trying to get in early. FOMO, fear of missing out. Can't be patient enough for it to touch your box, that it comes back and obviously hits your SL, because your SL would have been underneath this green candle you just lost when no one else is even in the setup yet. So we're waiting still, right? We're waiting. And as you can see, it still hasn't touched our box yet. So we are continuing to wait. Okay, so price is now in our box. So we're waiting for the break of a candle to the upside, because this is the demand. We're waiting on the candle of the break of a candle to the upside as a confluence and as our signal to get into the setup. So right now, if this green candle comes up and breaks its previous candle, which is this red candle, if it breaks this high, that's where we will be getting in. So let me just mark that up for you really quick so you can see what that look like. We're waiting on the break of this candle. Simply stop loss, a little bit of room. Obviously you're on the 1, could have head for this liquidity up here. You know what I mean? Your choice. But we always shoot for 1-to-1 first. So that's what we're going to go with. So if we're not in the trade yet, but if this green candle comes and breaks that previous candle for the upside, we're going to get in. And you know what I like to do also is go to our 15-minute chart and mark up when the 15-minute people will also get in, which is ironically right when the 5-minute people get in. So we are still watching price. We're still watching. So it didn't break yet, right? And then it just broke. So right here, when it didn't break and this red candle printed next, what you should have done is brought your entry down, right? Because now we're waiting for it to break this red candle and the next candle does that. So you should have brought your entry down, and you should have entered as soon as that green candle, this one right here, blasted above this red one. We're in the setup now, right? We are in the trade now. At least the 5-minute people are in the trade. 15-minute people, as you see, it just broke their candle as well. So now they are in the setup as well. You see what I'm saying? But they got in a little later. You see that our sniper entry allowed us to get in a little earlier down here when the 15-minute people just got in up there. So we're waiting to see what price wants to do now, right? We like the fact that we got these wicks. It's fighting to the upside. Finally broke above this little doji. So it's looking okay right now. The only thing that we have against us is our EMA. Now, I haven't spoken about the EMA too much because I'm not trying to introduce indicators too early. I don't use indicators, don't preach indicators, but the only indicator that I do use is the EMA. I use the 13 EMA. You can use the 200 EMA, whatever works for you. You find out what works for you, but it's the EMA. That's the only indicator I use. I would like for the EMA to be in confluence with my setup. So since this is a demand, I would like for this yellow line, which is the EMA, yours might be another color, to be on the bottom of price, pushing it up since I'm buying. Because what it's going to do is price is going to hit this EMA and it's going to fight. It might wick down. Not saying you're necessarily going to lose if the EMA is going against you. I'm just saying it's going to be a battle to TP1 is what I'm saying. Sometimes it's not. Sometimes price would just blast through the EMA, but more than likely, once price gets to the EMA, no matter where it is, it's going to be a little bit of friction there, you know, a little bit of up and down, just because that's what the EMA is there for, right? It's the average. So when it gets there, it kind of acts crazy. So I would like for the EMA to be in confluence, but if it's not, that doesn't mean I'm not going to take the setup. In this case in particular, we're buying, but the EMA is at the top, which could push price down. But I know that, but I also know it's just going to be a fight. I trust my strategy. I trust my setup. I trust supply and demand over the EMA, of course. So I'm not going to be like, oh, the EMA is at the top, I'm not going to take this setup. Nah, I'm just going to understand, like, hey, don't try to pull your losses early if you're in drawdown, because it's going to be a fight. Don't get mad if you see some wicking candle going up and down, very volatile, because we're on the EMA. Also, as a pro tip, I tell myself, if the break of the candle was right there where I got the arrow on the EMA, if the break of the candle was right there, I would not add a position. I try my best not to add a position on the EMA. right? So if the break of the candle was right here, I will wait till price was above the EMA to get in for the buy and not place my position right on the EMA, because like I said, as soon as it touches that, it might want to wick down. I don't want to put a position right on the EMA and go right into drawdown, especially on the standard lock. So I wait. So that's just some pro tips, a couple pro golden nuggets there for you about that EMA. Also, the further price is from the EMA allows you to know how strong the trend is. So I also use the EMA as an exit tool, right? So I might not use it as an entry tool, right? But I will use it as an exit tool. So if price comes and disrespects the EMA, closes above it, or you know what I'm saying, something like that, then I will use that to get out of the signal, or to get out of the trade, excuse me. So back to our setup here. We're sitting here waiting. The 15-minute people are in, we're in, everyone's in, right? Some drawdown, boom, right there. You see right here, this red candle, when it came down, I'm telling you right now, some people might have given up right there because they think, oh, the EMA, we're on a downtrend, it wants to come down and get up in here some more, when that was the fight. That's what I mean when I said it's going to be a fight. It was this red candle. It was this red candle. But me knowing that the EMA is going to cause a fight, I'm not worried about this because I'm expecting to see it. And I also know once price gets above the EMA, comes back and touches it like this green candle is, and breaks above, that's also a good confluence. So I got out about right here. So a little bit over 1-to-1. I didn't play around with this setup at all. I just got my 1-to-1 and kind of got out. The market is still moving a little funny. I can't really call it, man. You just got to kind of trade what you see. You know what I mean? Come in with no bias, trade what you see, trade what you know, stay disciplined, trade by your rules, and eventually something will pop. This was just a simple 1-to-1, smooth textbook setup. We can go back to the 15-minute time frame here so you can see that gap again. And this was it. You know, like I said, we have a downtrend, but we had a gap formed with some aggressive buying, and it did this type of break structure to the upside, kind of an uptrend pattern, came back in and filled that gap and threw us in. Took it for a simple 1-to-1 because this is a counter trend move. Since we're on the downtrend, obviously, since we're on the downtrend, we should be looking for a supply. So you don't want to be trying to hold this demand. You don't want to be trying to hold this demand to the supply. You know, you don't want to necessarily be trying to do that, but just understand that price wants to head towards the supply off the demand and just kind of get your 1-to-1. Don't be too greedy in these markets, especially right now in the first month of Q1. Let's just let it do what it do and just trade what you see. That's all I got for you guys. I hope y'all enjoy what we went over. This is just a simple textbook setup, 1-to-1, just breaking it down for you, going through it. Just back testing, right? You always got to back test and understand why you won and or why you lost. That's what makes you better as a trader every day. So, hey, if you learned something, please like, comment, subscribe, share the channel, right? Let me know your indicators. Let me know how your first couple weeks of Q1 has been going. Just tap in with me, right? Please tap in. We've been getting hella views. We're over 1,000 subscribers. Really appreciate it. I had to take a few days off just because I couldn't believe the amount of growth that happened in such a small amount of time. So I just want to say thank you. We back on the grind. We back focused. I'm Mr. Unorthodox. Keep thinking outside the box. Peace out.